Welcome to Markets Now. I'm Michelle Rook with Scott Varilek, Kooima Kooima Varilek. Well, the livestock futures are trading a little bit lower this morning. We're kind of mixed here in the grain trade. And Scott, the cattle market, like I said, a little pressure there. But do you feel like, with the weather that we've had this week, that we have enough weather premium into this market or not?
Well, thanks for having me. And that's a great question to start with, because we've been in this nice little sideways trading range, not a lot of action here, which yeah, I'm not complaining about after what we just went through at the end of last year, but that doesn't feel like that's penciling in any of this weather premium. I keep hearing about chain speed and, packers are having to cancel loads, but this big of a weather system in such cattle feeding country, that I think that's a really friendly story. That's more where I would lean to what it should affect the market, because our problem in the cattle, one of them has been the weights. Our carcass weights are huge, and we knew that. We had great weather, we had cheap corn, and producers fighting the market. Those three things were really putting the weight on the cattle. This is going to change. I mean, this is going to say, hey, these cattle got to go. They're going to be going backwards in some of these weather conditions, and it's going to be an absolute struggle to keep the weight on these cattle, to get them gaining what you want them to gain. So I'm more looking at the long term, that this is really going to help out the cattle market than worrying about losing some days here and there from a packer. So I don't think we've got enough premium penciled in because of the weather, and I think it's just going to be the gift that keeps on giving. The snow is here. It's going to be around for a while. Yard conditions are going to be in rough shape, and we've got a large number of the dairy cross calves. They are not set up for this kind of weather as well. So, I mean, with that amount of numbers in cattle feeding country, that's going to be struggle. Production's it's going to get tough, and I think we need to probably rally more because of that.
Yeah, and the boxes have rallied here artificially because of the pullback in the chain speeds, haven't they?
They have. I think they needed something to bounce off of. They've been on the slow bleed, and it's January. That, can happen. I mean, you're a little slow seasonally, and nobody's really firing up the grill other than me. I got my propane bottle filled yesterday, but that's where we're getting a little bounce off from the slow chain speed. But I do think demand has been holding pretty firm, surprisingly. And looking at some of these retail prices compared to a year ago and compared to history, we're crawling below year ago levels on some of these prices, on some of these cuts. So I think that bodes well. We're trying to decide if the health of the consumer is good or not. We were always wrestling about this economy over the last 3 years here, what the health is. But I am a little worried that maybe these high interest rates are, just have been weighing on the consumer long enough to where that's maybe putting a little bit of a struggle there. So anytime they say we're lowering interest rates, I feel good. I think that's good for the consumer's health. So hopefully some of that outside news will kind of leave us alone, and we can get back to we know the consumer wants our beef product, and that's the way they're going to be.
Yeah, that's definitely been proven. What about the cash trade? We haven't seen much this week so far. It's been kind of in that steady, firm tone.
Yeah, steady, firm, and pretty slow. It seems like they're kind of, nickel and diming every day. There's a few head that sell. We're not all trading at the same time. I think, partly because of the weather and trying to make sure when loads can go. So it seems like every day we've had just a little bit of trade, and it's all been real similar. Some of the regionals were out in front, bidding 175, getting quite a few head around them, and some 272 in the meat. Some of that 272 was with the grid premiums on attached for plus on that, if it's a plus. It's been great selling premiums, as far as with that choice select cutout that was so wide. It has gotten quite a bit narrower, so I'm curious to see if that's going to take away some of that premium that we've been getting. They're still saying, I think I can pick up $6 on the grid, but it's we'll see. But if that extra choice over the select is going to pay that well anymore.
What are you thinking about the technical picture of the market? Because we took a run at the 50-day moving average, and the Feb contract couldn't get through it. So we're going to need more bullish news to get us over that hump, aren't we?
Yeah, we haven't had any major breakouts yet. You've got, consolidation on a lot of these moving averages where they're all kind of starting to line up. And, Some of those deferred contracts where the biggest story is have tried to cross. The fronts have not. So I do like that fact that we do see some of the deferreds do it. And I always kind of think if the deferred contracts do something that I really like, that the fronts can eventually work their way to it too. Or vice versa. If the front's, breaking out of something, then usually the deferreds can follow suit. So maybe I'm just more in the hope category on that, but there's nothing that I'm looking at a chart that says, wow, that's exactly what I needed to get this thing to move higher or to lower. We're pretty sideways in a range and going to need some news to break that out.
Yeah. Feeders are still feeling good just because of the inventory kind of tightening or continuing to tighten?
Yeah, continuing to tighten. I guess I'd look at, it seems like these January feeder calf runs are a lot slower, a lot tighter. The numbers are just down compared to year ago levels. And yes, we placed a lot of calves early, October, November. We saw that on the cattle on feed report. So there's not near as many available, out there, plus our smaller cow herd. And that's what we're going to really highlight here in the end of the month. We've got our cattle inventory report. So I'm really looking forward to that more than I am the cattle on feed report, because that's kind of the true long-term story. It's the story that got us to where we were at all-time highs with that tight cow herd. So I'm looking forward to it, I guess. So that way we can see, okay, are we rebuilding this cow herd or not yet? The slaughter of heifers over the last year, the steer to heifer ratio tells me heifers were in the feed yard last year. So they are not sitting here with a baby in their belly ready to have a calf here coming up this spring. So we still need that heifer retention. That still needs to happen to rebuild this cow herd. So I think feeder prices are firm, and I think that's going to be what's going to be the leader for this year to try to lead us. If we're going to get to some higher prices, it's got to come from the feeders.
Yeah. Hogs, we were up 6 days in a row, and today we're down. So is this a little profit taking, or is this thing just run out of gas?
A little bit of both, but I'll go with more the run out of gas is my thought. We've got we had a little product rally, probably with some of this disruption and the chain speed and getting product out. But I think once we get, next week, get back into a normal schedule, I still think we've got, the weights, quite a bit over year ago levels. We've got big weights, and you got to get used to that large carcass number that you see from what we're used to. So I think there's plenty of hogs to chew through. And once we get the slaughter speed working good, I think it's going to be trouble again. So I think it's correction time, and the hogs is a nice run, using it as an opportunity to have some hedges on and some protection here.
Yeah. And of course, we have the USDA reports with the emphasis on the S on that coming up here today. We've had such a sell-off in the grain trade, especially soybeans, to start the year. Do you think that there's anything in this report that can get the markets changing trend to see a rally and the funds maybe getting out of some of these shorts?
Right. I think there's that hope. I keep hearing about the January report, and it is a market mover. It is one that moves. And we used to have so many limit moves from this January, as soon as it came out. But it used to come out when the market was not open, when it was not trading. And I feel like we've not done the limit move since it's been at 11 o'clock. I don't like it at 11 o'clock just because it's, the computers get the data before we do. But I don't, to answer your question, I don't know that I see that there's going to be any kind of information that's going to really turn the tide, get some of these funds out. We know we had a pretty good sized crop, and usually big crops get bigger. I've got that fear that that's what's coming for us on this report. And that's probably why the funds are short, and we've just been a slow bleed lower. But saying all of that, these option prices are just so cheap to me, especially on some of these corn prices, that I don't think the market expects it to have a big move either way. So I think this might be one of the more dull January reports that we've had. I feel like we're just going to turn the page and say, okay, we've got a pretty decent supply. We got South America getting rain. We got overseas turmoil. We just have to fight all of that same news as soon as we turn the page from this.
Yeah, we'll see how long we trade the reports and then go back to those other things you talked about. All right, thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.